In this video, we're going to work exercise 9-9A. It's year 4. You can pretend that's the year if you want to, 2024, 2023, whatever. So, and it's for the Burdette Company. They give us a balance sheet, the year ending balance sheet, December 31st. And we've got question marks everywhere in here. Then we also got some ratios. And the requirement, the first one, this is what we're going to do in this video, is A, the balance in the trade accounts payable, year December 31st. Calculate it, determine it. Well, we got a question mark here. So that's going to be somewhat challenging. Oh, and by the way, accounts payable, when it says trade, that means they owe vendors. Looks like they make stuff. Cost of goods sold, inventory turnover. Sounds like they either buy and resell or they're a manufacturer. So that's their vendors that they buy stuff from, to either resell like Walmart or to make like Ford. All right, so let's change screens so I can write. Now there's some things that we know. We know that the total of assets is the same, or the total of assets equal liabilities and stockholders' equity. So we know that. We know that these two are equity. We know long-term debt is not a current liability, but income tax payable is a current liability. It's due within the year. And by the way, that's a placeholder. We're just estimating what our income taxes are. We don't know what they'll be until we actually file the return. Accounts payable is a current liability. Let me get that cleaned up. Well, while we're at it, let's go ahead and do these two. Cash is a current asset, obviously. Accounts receivable is a current asset. Inventory is a current asset. And property, plant, and equipment, PPE, is a long-term asset. So we know that these three numbers add up to be the total of our current assets. All right, so when I touched a button, it went crazy. Let me get this back in here. So these are our current assets. All we need to do is take and subtract our total assets from our one long-term liability that was given, and that will give us the total of our current assets. So by taking 518,400, subtracting 352,800, that gives us our total current assets. Now again, I don't know how much of that 165,600 is accounts receivable and inventory, but we do know part of the 165,600 is 30,000 cash, right? We also were given, and I'm going to let y'all look that up. I'm not going to change screens. That current assets divided by current liabilities equals 1.5. Actually 1.5 colon 1, but we only need 1.5. So we can also now add 165,600, because we know the total of the current assets is 165,600 divided by current liabilities equals 1.5. That means our current liability, do the math, our current liabilities are 110. 110,400. So these two numbers, that's just subtracted because these are our current liabilities. We already talked about it. And because the total of these two are 110,400, all we need to do is subtract 30,000. And that will give us 80,400. So that means 80,400 goes here, and that's the answer to part A. I think I'm just going to finish the video here, and I'll do another video for B and then another video for C.